Let me ask you a simple question. Have you ever seen a stock, a crypto, or an investment going up fast and felt like you had to get in immediately? Not because you fully understood it, but because you were afraid of missing out. If that's ever happened to you, this video is for you. Welcome back to Finance with Successful Success. My name is Success. On this channel, we don't chase hype. We focus on clarity, discipline, and long-term thinking. Today, we're talking about FOMO, fear of missing out, and why it's one of the biggest reasons investors lose money worldwide. FOMO is not about intelligence. Very smart people fall into it. FOMO is emotional pressure. It's that feeling that says, everyone else is making money and I'm being left behind. When prices rise quickly, the brain interprets that movement as urgency, not opportunity, urgency, and urgency is dangerous in investing. When investors act out of FOMO, a few things usually happen. First, they buy late. Most FOMO buys happen after a big move, not before it. Second, they overpay. The excitement is high, but the margin for error is very small. Third, they panic, because when you rush in emotionally, even a small drop feels unbearable. And finally, they abandon their strategy. Long-term plans collapse under short-term excitement. This behavior isn't tied to one country or one market. We've seen it in crypto cycles. We've seen it in meme stocks. We've seen it in fast-rising tech stocks. Different assets, different markets, same psychology. People buy when fear of missing out is highest and sell when fear of loss takes over. Now here's the important part. Successful investors don't avoid emotions. They design systems that protect them from emotions. Here's how they do it. First, they follow a plan. They don't decide based on headlines or social media. Second, they invest consistently, not perfectly, consistently. Third, they define risk before they invest. How much they're willing to lose is already decided. Fourth, they wait. Waiting is not weakness in investing, it's discipline. And fifth, they diversify. No single investment should have the power to ruin your portfolio. You have to understand this. If an investment is truly good, it will still be there tomorrow. Opportunities don't disappear overnight, but bad decisions can damage your portfolio for years. FOMO feels urgent, discipline feels boring, but boring investing is usually the kind that works. Markets will always move. Trends will always come and go, but the investors who win long-term are not the most excited ones. They are the most disciplined ones. FOMO is emotional. Smart investing is calm. And on Finance with Successful Success, that's how we approach money. If this helped you think differently about investing, subscribe for more calm, strategic financial insights. I'm Success. Thanks for watching.